As the threat of the COVID pandemic recedes, governments and businesses around the world are bringing the focus back to livelihoods and economic revival. Borders are reopening, albeit with caveats and restrictions. Employees are heading back to office, and stimulus measures announced to cushion the impact of the worst of the pandemic are starting to be wound down. The Indian economy is on the mend, with high-frequency indicators pointing to a recovery post the devastating impact of the second wave. Domestic demand is starting to pick up and global growth remains strong, though supply chain disruptions and high commodity prices weigh on business sentiment. The Indian government has announced measures to boost manufacturing growth, and an abundance of capital is helping drive deals and the stock markets. So what does the future hold for the Indian economy, the capital markets and corporations? Join me now to discuss the road ahead on this very special inaugural episode of The Making as we kickstart season 2 is Hitendra Dave, the Chief Executive Officer at HSBC. Hitendra, always a pleasure. Many thanks for joining us here on this very special episode of The Making as we start season 2. Let me start by asking you what the last few months have been like for you, Hitendra. You came in at a time when we were seeing the worst of the second wave, the Delta variant playing havoc across health as well as the economy. So steering the ship through those troubled and tumultuous waters, what was that like?
Well, first of all, thank you, Shereen, for having me on your show. So I think, May, June were particularly bad months, whether you were seeing yourself as a family member with family, all of us had family members who were down, or with many of our staff. We had unfortunate situations with some of our staff where, we unfortunately couldn't make it during that period. So it was an emotional challenge, right? On the one hand, that not a happy period, not just for you, but for your wider team, for wider family members. And at the same time, there was a transition within the organization. So I think one had to be balancing quite a bit, I would say. But I would want to use this opportunity to say that I think the work done by our teams, the volunteers in our organization was just absolutely outstanding. I think there are heroes of 2021 in our organization. Those people who just went extraordinarily out of the way for helping out families of people that they didn't even know. The only common link was we have a common employer. So it was and that sort of told you that you're in the right place at the right time almost.
Yes, there are many such heroes across different organizations, and of course, healthcare workers continued to battle on the front lines. But Hitendra, the expectation was that given the kind of devastating impact that we saw as far as lives were concerned on account of the second wave, that the economic impact would be equally devastating. But that was not the case, and perhaps because we saw the lockdown restrictions lifting fairly quickly and swiftly across the country. As things currently stand, what do you make of where we are in the recovery, and more importantly, the confidence that you have in this being sustainable and us being able to build on this further?
So my own sense is, and as with a lot of other people, and as you mentioned in your comments, I think all of us are taken in with a very degree of positive surprise that all of us as consumers, employers, employees, just general citizens of the country have managed to overcome what we all thought was a once in a lifetime scar that we saw in April, May, June. So it's something, tells you something about the resilience of our people and the general optimism that some of us carry into our daily lives for reasons which are possibly difficult to understand at this juncture. I think looking at the situation today, my sense is the bounce in demand that you are seeing across a bunch of sectors. I'm not just hoping, my sense is this is slightly more than just pent-up demand coming back, right? I think it's a bit more. It's built up savings or savings which were unplanned. It's corporations really experiencing significantly better operating cash flows and therefore, doing good to their staff, doing good to their vendors, etc. I think the lower interest rates at play, mortgage rates at 6.5. When did you ever see that? We used to have 6.5 as deposit rates 2 years back, remember? Today we are getting a mortgage at 6.5%. Some of that is kicking in. I think the government of India, I think we are in a country where we don't like to credit the government for most things that go right. I think the fact that, they were spending 20 odd lakh crore till March 20, and now they're at 30 odd lakh crore, plus minus a few lakhs here or there. That's 10 lakh crores is $150 billion. That has to convert into someone's income, someone's order, someone's revenue. So I think a mix of all these things, lower interest rates, operating cash flows, and the booming export markets, I think are giving me the sense that companies, at least the ones I talk to, are increasingly thinking if this lasts for 3-4 more months, maybe we really need to start planning for this level of demand on a go forward basis, and which is what we've been waiting for the longest of times, right? We have not had companies have the confidence or the balance sheet structure which allowed you to do so. I think both are coming into place. So in case it's not apparent to you, I'm quite bullish and optimistic about the outlook for the country.
Well, it's good to hear that, Hitendra, and it is very apparent that you are bullish. But so let me pick up on the issues that you spoke of. One aspect that's different this time around in comparison to the last crisis that we saw, not just in India but globally as well, is the fact that balance sheets are a lot stronger. The deleveraging has taken place. The poison, to a large extent, is out of the system. And secondly, you talked about private capex finally picking up. And yes, the wait has been long and it's been elusive as well. Given where utilization currently stands across industries, 70%, 75%, and the hope is that this will pick up, are we a quarter, 2 quarters away, 3 quarters away from private capex starting?
I think a little longer. I mean, 2 points here. One is I think it will be a little longer simply because most corporate boards were scared that their companies were going to get caught up in what was happening in India. Anybody with large level of indebtedness, capacity utilization in the 50s to 70s, prices really remaining soft and unchanged over many years, etc. I think had really told the executive management, you get your balance sheet into shape before you talk about any expansion, right? Or even the announced expansions, they were, if it was a plan was 3 years, they were doing it over 5 years so that the cash flows wouldn't get stretched. Given that this complete U-turn on this whole factors has taken place literally in the last 18 months, my guess is large companies and their boards are going to say, listen, let's get the whites of the eye of the demand in front of us before we start doing so. So in the good old days, yes, the current scenario would have been good enough for people to unleash capex, but I think given just the kind of stress even the largest companies in the world, in the country, had in serving debt and or worrying about sustainability of debt, my guess is they will wait a little longer than might have been the case in the past. I think just also on the point number 2, like I mentioned, I think for all the positive commentary that I gave in my previous answer, I think it cannot be denied that there is a certain section of business, whether it's informal in urban areas or formal also in urban areas, where I think there is a need to help out. And obviously at an individual level, the urban poor are clearly not back to where they were. And one has to hope that while the good narrative that I spoke about, this section is looked after through fiscal measures or through, universal basic income or identification of targeted schemes of food or whatever. I think it's important to carry that off because then the growth will also be a lot more sustainable. These 2 points I thought I'll make.
No, that's an important point that you make. And of course, while there is a recovery that we are seeing in large parts of the economy, the informal sector continues to be patchy. MSMEs are also seeing a patchy recovery at this point in time. And the point you make about the urban poor is well taken as well, though the government at this point, I don't believe, is looking at the possibility of any kind of an income support scheme. But Hitendra, let's talk about, where you actually see the rate cycle now. Globally as well, we are now starting to see a winding down of stimulus measures. There's all eyes on the Fed, on what the Fed is likely to do, whether we're going to see a start of the taper minus or with the tantrum in November or not. But, global factors as well as what that portends as far as India is concerned, both in terms of liquidity as well as our rate cycle.
Yeah, so I think as far as the Fed is concerned, I think the first step is going to be they stop injecting liquidity. We in the fixed income market, and given that I come from that background, we tend to worry a lot more. We are worriers. We are unlike the equity market, who enjoy their life a lot more. So I think the first step is they're still injecting liquidity, and they've injected so much liquidity it can last many years. Because unlike in India, where we have currency in circulation, which tends to drain systemic liquidity, in the West that doesn't happen, right? So whatever has been injected remains there. So the first stage is there won't inject anymore to an already super abundant liquidity situation. The second stage, at some stages, they'll start withdrawing, right? And that's when the rate cycle starts. And almost everybody seems to think that rate hikes are, let's say, between a year to 2 years away. But the terminal rate is what? People are talking about 1.5, 175, which even if while it's low higher than zero, it keeps the cost of capital extremely low. So I think the taper of 2013, I think I don't think any of that is likely to happen because the affected countries have taken care of it, and the Federal Reserve has also learned that you need to communicate much in advance. Coming to India, I think you have heard the RBI governor say many times that we need to nurture growth while obviously looking at inflation. I think there is a near consensus that this inflation largely supply side shock driven as opposed to demand. You cannot say 50% of the population is poorer than what it was 2 years back and worry about inflation at the same time, right? These inconsistencies somebody will have to live through. My own guess is our system liquidity is more than sufficient. So again, RBI, just like the Fed, will initially focus on how to do it. My guess is we're going to see an extremely deliberate and calibrated RBI both on liquidity and on interest rates.
Yes, and I think, as you point out, the governor has made it clear that the priority continues to be to bat for growth at this point in time and nurture growth. But you talked about how the fixed income guys are warriors. There's plenty to smile about as far as the equity markets are concerned today. In fact, that camp is cheering and cheering loud. What do you make of the way that the markets here have rallied? Of course, we've seen a global market rally on the back of abundant capital, but linked to what we are seeing on the fundamentals as well. The flurry of IPOs. What does this mean as far as equity markets are concerned, and also in terms of consumption? I mean, let's just look at what's happened, for instance, with the Freshworks listing. The founder says that overnight they've been able to create 500 crore pratis, with 70 of them being under the age of 30. What does this do to the consumption cycle, to consumer patterns?
I think number one thing is this is one of the the more supposedly intelligent you were, the more you got it wrong, right? Because you kept looking at what's happening to the wider economy and kept thinking that GDP has grown negative in a full financial year. How can the stock market go up? But you have to take your hats off to the people that people who invested through this cycle got it bang on. They were absolutely right that you in a shrinking economy you can have winners, and stock market is not necessarily a reflection of the GDP or of the economy. It's a reflection of those 500 companies or those 1,000 companies. And we spoke about that, right? All companies went into a massive cost squeeze last year, and those they have made permanent. And now they're discovering operating cash flows go higher. So the margins in every major company is experiencing surge in demand and pricing power. You look at banking sector, the sector I'm part of, most corporates have managed. There's been very little balance sheet damage from the corporate side, and even on the main products like your mortgages and things, or even unsecured loan books have stood up. I mean, there is some stress, but nothing compared to what the banking system was used to. So IT sector, I think every global corporation today wants to make sure that they are outsourcing and finding better solutions, more value-added solutions at a lower cost, which is what the Indian IT sector offers. And they've gone into clouds and other areas. So whether it's financial sector, industrial sector, I mean, you've seen people from steel sector, cement sector, paint sector, all talk about the fact that the only constraint they have to meeting the demand is their ability to produce or export demand. The only constraint appears to be shipping and containers and not demand. So I think all told, you think the stock market got it right, but to the point you made, I think it's part of the healing process, right? I mean, this is allowing companies that needed equity to raise equity at terms which they're okay with now. The whole startup ecosystem, I think it's brilliant what's happening in India. This is absolutely not just the fact that there are 500 crore patis or whatever. The only thing you regret is that you're not under 30 and in that category. I mean, that's the only regret I have in this story. But it is. I am sure young men and women are seeing this and want to do something different, as opposed to people like us who just chose a very conventional career path. And that's what you need. You need people who are willing to take a risk, willing to create employment, willing to create wealth. And that's the best thing about this. These 500 people are going to create another 500,000 in the next 5 years. And therefore, business which was largely restricted to, say, I would say 10,000 families, let's say, can potentially be much more democratized. So this is undistilled great news. What's happening to the startup ecosystem, what's happening to young people making money, the confidence they have, the work ethics they have. Good part is they're also being better corporate governance than some of the older industrial families.
Well, I share that regret with you, Hitendra. I wish I was younger and richer as well. But nevertheless, let's continue with this conversation. And what does all of this now mean in terms of HSBC's ambitions and aspirations for India? India continues to be a strategic market. It is one of your core contributors in terms of global revenue. Given where you are seeing things currently, what will be the future bets? What will be the focus areas for you?
No, so you're absolutely right. India, see, we have a more than 150-year association with India, right? So it's not a market we are a tourist in, or we are here for good. We are here for all the time, right? So I think, and HSBC's greatest strength is our global network, right? We are there in 70, 75 countries, all the countries in the world from where the FDI that you spoke about, or the FPIs, wherever they come in. So the number one thing is we want to connect all our customers with the opportunities that exist all around the world. In the context of India, it is my job is to make sure the India story, or my job and my team's job is to make sure the India story is conveyed in the right way, the potential, the opportunity to global companies, to mid-sized companies around the world, and get them to look at the PLI scheme, get them to look at the opportunity to meet the demand here in any sector, right? I mean, India is a great story to sell in that sense. Similarly, Indian companies, now that they're sort of looking once again at growth, some of that growth will be outside India. We will be there wherever they want to go. So that's the second part of it. NRI population, we are the only bank which has a high street presence in India and in the entire English speaking world. Right? There's nobody else, and most Indians want to send their kids to these places. We can assist them in this process. People want to put some wealth outside India. We have global wealth hubs which can facilitate not just investments but also mortgages and things of that nature. Um, and overall, I think given the, like you mentioned, India is one of the top three, four contributors. Last year, we had reported a PBT number in excess of $1 billion. That clearly means that the group is willing to support our growth ambitions with capital, with liquidity, with resources, with people, and with technology. On technology, I think my own sense is, and sort of, I'm going to be biased towards HSBC here, but some of the propositions we have in our trade products, in our cash management products, I think are unmatched in the market. I would encourage viewers here to try and open an account with us, a corporate, and then experience. And if somebody's got a better proposition, I will come here and correct myself.
What are you doing differently? What are you trying in terms of new innovations, just to keep pace, perhaps with the fintech universe, or co-opt the fintech universe as well?
No, so it will have to be both. We will have some propositions which are better than fintechs, okay? And there we will go stand alone and go with the full force of HSBC standing behind it. But we don't really, we are not a. There are companies whose job is to make digital products. My job is to take deposits, lend the money safely, and offer customers reasonable quality advice. If and do so in a digitally enabled way, but I don't have to do 100% of it on my own. So to the extent that there are high quality off the shelf platforms which we can integrate into our system and use that to integrate into the customer systems, we are very open to that as well.
Right. I want to address the point that you made about inbound as well as outbound deals. We have seen significant inflow of foreign direct investment coming in. The hope is across these 13 sectors where PLI schemes have been announced, there will be foreign interest and foreign participation that will come in. Where do you see a bulk of the investments? Which are the sectors that you believe will be the focus sectors from an inbound FDI perspective? And from an outbound deal point of view, where do you believe Indian companies are going to make investments?
So I think the inbound is obviously proportionally it's going to be much more inbound. India is always going to be, for the foreseeable future, a beneficiary of global capital coming into the country than the one remitting out capital. I think very clearly what the government of India has done on renewable here is going to draw massive amounts of capital. The amount, because we are now doing these at large gigawatt kind of auctions, it's clearly allows serious large players to think. So that's, I think, one area where clearly, and it's ties in with the ESG agenda. HSBC itself is extremely committed to the to the ESG agenda. So we will not just facilitate the FDI, but hopefully also partner on an operating company basis.
We've talked about the growth triggers and the possible factors that will aid the recovery, but let's talk about some of the challenges as well and some of the potential headwinds. One, of course, is the cost of commodity, raw inflation. Inflationary pressures, especially on account of raw material costs. That's impacting just about every business at this point in time. There are concerns about what will happen in China and how that could potentially impact global growth. What are the key risk factors that you're going to be watching out for? What worries you today?
No, I think at this juncture, one is under the assumption that what you're experiencing is lack of investment in many industries over the last 7, 8, 10 years, and suddenly a huge surge in demand, which could be pent up demand related, could be government expenditure related, could be corporations generally experiencing a much better run than they expected earlier. But if you find that that's not the case, it's now demand which is seriously in excess of supply, not just because of supply shocks, but that could create a problem through the monetary policy channel. One of the things which has allowed the world to come out of the pandemic in the way it has come out is clearly outstanding work by central banks all around the world. And I think Reserve Bank of India, I think, deserves more than 10 on 10 according to me in terms of what they have done.
Let me end by asking you, since you brought up the issue of asset bubbles, and there are camps that believe that what we are seeing as far as cryptocurrencies are concerned is not just a bubble, but many call it, a Ponzi scheme and so on and so forth. But there are many who believes that that in fact is the future, and we are now starting to see traditional financial institutions also getting on board, not just with blockchain but with cryptocurrencies as well. Where are you? Which camp do you belong to, Hitendra?
No, so our institution has a clear policy on this that regulation is required. So you need the central banks to be leading this as opposed to private markets to be leading this. So we are a strong proponent of central bank digital currency, and within that also which particular cryptos we should accept and which we should not, and what should be the regulations around that, and what should be the do's and don'ts around that. We are actually engaging quite actively with many central banks around the world to try and have all of this information that we as a central figure collect from various central banks around the world, and then it's a two-way feedback loop.
Hmm.
So we think it's headed there, but we also think it has to head in a regulated manner with central banks taking the initiative and the lead here, as opposed to allowing it to mushroom all over the place. um, that's our position on this.
Well, it certainly is the view of the RBI here as well, that there needs to be very tight controls and it should be driven by the central bank itself. But Hitendra, it's been an absolute pleasure. Thanks very much for joining us to talk about a whole raft of issues. And may your confidence, be proved to be what gives the market the confidence as well. But thanks very much for your time and for joining us here on the inaugural episode of The Making on CNBC TV 18.
My pleasure, Shereen. Thank you for having me.
But with that, it is time for us to wrap up this episode of The Making. Stay on with us. We will, of course, bring you a lot more of interesting conversations. For now, from all of us here, goodbye. Many thanks for watching.